Hello, everyone. Good morning. Give me 1 second to make sure everything is set up. Okay, wonderful. Hello, everyone. I want to welcome you all to Kathy's Caffeinated Market Buzz Monday morning, where we talk about what's going on in the markets, what to expect on a fundamental and technical basis. We talk currencies, we talk gold, we talk equities, we talk about what's on the calendar, and that's what we're going to do today. I got Boris here with me today. You want to say hello, Boris?
Hi, guys. Hi, everybody. Good to see you. We're going to let Kathy run the show first, and I'll come in. I'll talk to you a little bit about gold and about equities, how the week is shaping up for that.
Yeah, so you all are always begging us for commentary on gold, and it will happen, and Boris will give that to you. Before we begin, let us know where you're coming in from and where you are right now, because we always like to know, what part of the world everyone is dialing in from. I see South Africa, I see Nigeria, I know we've got a bunch of friends from Europe and the US for sure. And, we'll kick off in just a minute. Boris, do you want to turn your camera off if you are going to let me drive the show?
Yep.
All right. Okay, so good morning, everyone. We have another very, very busy week ahead of us. Now, I want everyone to, just kind of take a step back. Typically with our Caffeinated Market Buzz, hold on, there's an echo.
Sorry, did it stop?
Yes. So typically with Caffeinated Market Buzz, we take a look at what happened in the past week, what's going on a macro fundamental basis, and what all of this could mean in the week ahead. So everyone's been kind of zeroed in on the US dollar, US data. And for those of you that, are just kind of learning about forex in general, or just the markets in general, it is US data and the market's demand appetite for US dollar that really drives pretty much all of the major currencies most of the time. And that's what really happened last week. Last week, the focus really started to turn on the US dollar. And because the reason for that is because we had two big events. Number one, it was Fed Chairman Powell's semi-annual testimony on the economy. Everyone was waiting with, bated breath at the edge of the seat to see whether or not the Fed Powell was going to, shed some new light on where interest rates are headed. And he did say something. And what he said is that, they were comfortable with the idea of raising interest rates in the next few months. The market interpreted the next few months to mean June. They still think that it's going to be the case. And I'll show you the Fed Fund futures in just a minute. And we have the non-farm payrolls report. U.S. jobs, obviously the backbone of U.S. economy. Any economy, job growth is very, very important. Non-farm payrolls came in weaker than expected. Unemployment rate increased, sorry, not weaker than expected, weaker than the previous month. Unemployment rate increased, wage growth slowed. Kind of the first signs of some, material issues that may be happening, or a more significant slowdown in the U.S. economy. But it is still too soon. And it is still too soon because, first off, there's a lot of data that's going to be released between now and the June policy meeting. This week, we have two pieces of data that's very important. And we'd even say 3 or 4. The two main pieces, of course, is going to be the U.S. inflation report and then the U.S. retail sales report. In addition to that, we'll be watching the Empire State Survey. The reason why I like to watch the Empire State Survey, which basically measures how manufacturing activity is doing in the New York region, is because it is kind of like the first piece of manufacturing sector data that we get. And then we get Philly Fed, and then we get ISM's manufacturing, and then we get ISM services. So it's kind of like a clue into how things are faring in March. On top of that, we have the University of Michigan Consumer Sentiment Index on Friday. So all of that is obviously quite important and, very meaningful for how the Fed could think and what the Fed could do next week when we have the March Federal Reserve monetary policy announcement. The March Federal Reserve monetary policy announcement is going to be huge. Not huge because they're going to change monetary policy, but huge because they're going to release their latest GDP, inflation, and dot plot forecast. And dot plot forecast basically tells us, how many rate cuts does the central bank and U.S. policymakers think that there needs to be in 2024, 2025. And previously, market was completely misaligned, meaning that, when we last got the dot plot, the Fed was projecting 3 interest rate cuts. The market thought there was going to be 5 or 6, and eventually the Fed's proved to be right. So let's see right now. I always like to look at CME Fed Fund futures. What is the market pricing in? For this week's meeting, 97% chance of no change. No surprise there. For June, the market is pricing in 70% chance of an interest rate cut. So not fully pricing in the interest rate cut. In July, they are pricing in a 90% chance of an interest rate cut. So somewhere between June and July is when the market is expected to change interest rates. And I want to see, you can compare this to 1 week. So the current is the dark blue, and the third line is the light blue. And you can see that overall, the market has shifted its expectations. It has definitely, shifted its expectations towards, so you see this more in June, where the market a week ago was looking at a much greater chance, or 96% chance of a rate cut, and now it's 92%. So not too much of a change, but still. And a more significant change should be triggered off of this week's inflation and retail sales report. And we'll talk about that more. But the stability of the U.S. labor market allows the Fed to really focus on the inflation component. And that is important because inflation is the part that is really moving more significantly. And then retail sales basically constitutes 40% of GDP. So consumer spending is also very, very important. Aside from that, the yen is a huge focus. Last week, 2 weeks ago, we had stronger Tokyo inflation data. And overall, we've seen stronger inflation data from Japan. And last week, we heard from a number of BOJ officials, including BOJ Governor Ueda, who we've been waiting for all this time. And if you've been watching what I've been saying before, I've been talking about how he's really the one that we need to listen to. And he finally said that perhaps they could raise interest rates before their 2% inflation target is reached. And there's been more and more talk about that this over the weekend, this week. There's been a lot of reports that they could raise interest rates as soon as next week when we have the Bank of Japan meeting, which is a little ambitious, but still, it's enough to drive the yen higher. On our YouTube channel, we have a video posted called 2024 Outlook. And we did this in the beginning of the year in January, talked about how buying yen and buying gold were two of our favorite trades this year. And I stand to that. I think the yen will see a much more significant rally. I think we're just seeing the beginning of a significant rally in the Japanese yen. And between US rates falling and Japanese rates rising, dollar yen could just be at the beginning of more losses. So this week, next week is the BOJ. This week, what we have is we have another union that's basically negotiating their wage prices. Now, last week, one of the big stories was that the union, one of the unions, negotiated its biggest wage increase, 5% since 1994. And the reason why this is important, and if we get a good wage negotiation, and I think they will because we have precedent for the other union this week, the reason why this is important is you think about it. If wages are rising, prices can rise, and because demand will rise. And that is why everyone is watching this wage price index. So these are two of the most important things that I think are going to be on the calendar this week, which is number one, the US inflation data, and of course the US retail sales data, and also number two, the Japan wage price index. There's going to be more and more talk of Japan raising interest rates this week. So that is something I'm definitely keying into. So now all of you are looking at my fundamental heat map, where I kind of give you a gauge of what to expect this coming week. So I am bearish dollars, but I'm cautiously bearish dollars, and the reason for that is because inflation is hard to say. Inflation could be stronger because gas prices increased in February, but the price component of ISM manufacturing and services dropped. Retail sales, the Red Book retail sales weakened, but the market's actually looking for retail sales to rebound in February after dropping in January. A lot of it due to a nice little jump in auto sales. So I'm cautiously bearish. I'm bearish US dollars in general, but you can't rule out a upside surprise in this week's data. You can't rule out the possibility of CPI coming in harder, of US retail sales is harder. As a trader, with big event risk like this, we never trade proactively. We always trade reactively, which means that we get in after the data is released, because the data itself can have a significant impact on price action in the days to follow and into next week's Federal Reserve meeting. We don't need to try to guess what it's going to be beforehand. With some data like non-farm payrolls, if you were on my Twitter feed, I laid out all the arguments for a weaker non-farm payrolls report, and the arguments were heavily stacked towards a dollar bearish, weaker non-farm payrolls report. But CPI and retail sales, it's a little bit of a tougher call, so it's not a done deal. So I would only trade after the data reactively, and that is what I think is really what we should be looking at this week. But still, I'm cautiously dollar bearish. I'm also euro bearish because ECB is shaping up for a June interest rate cut. Data has been mixed, but the language we're hearing from the ECB, even this morning, we heard from an ECB official that indicated that interest rates will probably be lowered in June. And with the ECB, they love to prepare the market for any meaningful change, especially if they really know what's going to happen. So I think that they're definitely telling us that interest rates are going to be lower in the summer. So I'm euro bearish, less so against the dollar because I'm also dollar bearish, but more so against some of the other currencies like euro yen. I've been very bearish euro yen if you've been looking at my Twitter feed. Sterling, I am also bearish. So we have a lot of data from the US this week. We also have some meaningful data from the UK. The most important report will be tomorrow's jobs report from the UK, followed by industrial production on Wednesday. And job creation was weaker according to both the manufacturing and service sector PMIs. So I think it could be weaker, and I think that that's going to weigh on sterling. But it would be a mistake to not understand that sterling will be primarily trading on the market's appetite for US dollars. The Australian dollar, I am neutral. We don't have any significant Australian data this week. We have some ancillary data like consumer inflation expectations and some confidence numbers, which are important but not entirely market moving. Last week, we had on Friday inflation data from inflation data from China, which was hotter than expected. And we also had reports that Australia was going to abolish 500 tariffs, all of which should be good for the Aussie dollar, but Aussie really isn't moving neither here nor there. The Canadian dollar, we have really good data from Canada last week between the BOC leaving rates unchanged and also the stronger Canadian jobs report. I am still bullish Canadian dollars, and I think like short euro CAD, maybe short dollar CAD still remain interesting opportunities in my opinion. I think those are pretty interesting relative value plays, but there's no data from Canada this week. I'm neutral New Zealand dollar. We have credit card spending from New Zealand this week, and then I think we have some confidence numbers as well. Not huge market movers, nothing going on. Kiwi is going to trade on risk appetite, how stocks are trading, as well as how the US dollar is trading. It's not going to be trading on what's going on in New Zealand by itself. I'm bullish the Swiss franc. I'm bullish the Japanese yen. I think stocks are peaking. I think they're due for a greater correction. Of course, if inflation data comes in stronger, that is going to be bearish for stocks, because what that means is that the Fed could leave interest rates at these elevated levels until July instead of June, which is bearish for stocks, and basically bullish for the dollar, bearish for gold, and that would be bearish for yen pairs, Swiss pairs, which is why I am interested in that. And I think that the yen and the Swiss franc should rally. But the yen itself, though, I think should rise, because we've got the BOJ rate decision that is going on the following week. We've got that wage price index, and overall, I think that the market is preparing and unwinding their yen, their long dollar yen, long euro yen, long CAD yen positions ahead of this really big event. And I think it's a smart thing to do. So that's what I'm looking at on a fundamental basis. Taking a look at the calendar. So as I said, on Friday, we had Chinese inflation data, which came in hotter than expected. And then last night, we had Japanese GDP numbers. Now, these did come in weaker, but I think some upward revisions are expected, but not a huge market mover. Today, we had nothing going on the calendar. We had Swiss consumer confidence was slightly weaker, but not a huge market mover. Nothing from the US. Later on, we have New Zealand credit card spending numbers, which are interesting. Australian business permit, also building permits and business confidence. I'm always interested in these reports. PPI, which should show a little bit of an uptick in inflation, confirming the trend that we've seen in price pressures in Japan. Tomorrow, we have revisions to German inflation data, not a huge market mover. We do have those UK jobs reports that we talked about earlier. And with the UK jobs reports, I think that those numbers should be weaker, because we did have a deterioration in the employment component of service and manufacturing jobs. And then the main focus, of course, will be the US inflation report. And I want to draw your attention to the fact that the market is looking for the inflation rate to rise from 0.3 to 0.4. It is looking for the core rate to slow slightly, the year-over-year rate to hold steady on an annualized basis and slow on a core basis. So it's mixed, and it could go either way, and that's why it's much smarter to trade it reactively. I think it could be softer because gas prices are lower, but you never know. But this is a huge room for a surprise and for some opportunities in trading the dollar afterwards. And we'll be looking for those opportunities, BK traders. We'll be trading the data reactively. Then we have on Wednesday, UK GDP. These are monthly reports, industrial production numbers, less market moving than jobs report, but still kind of interesting. This is the most important report for the Eurozone this week, which is not really that, so it doesn't really say much when it's just industrial production. And that is expected to be weaker as well. Nothing from the US on Wednesday. On Thursday, though, we have Swiss PPI, which is interesting, but not all that market moving. Instead, the US has its data dump on Thursday. Retail sales, jobless claims, PPI. Now, PPI is going to take a back seat after CPI. Retail sales will be the main focus. Once again, the market's looking for a dollar positive number, looking for retail sales to rise by 0.7%. So inflation could, the economists are looking for inflation to potentially surprise the upside. They're looking for retail sales to potentially surprise the upside. But if you saw from last Friday's report, you can see these Wall Street economists paying, buku dollars can very much be wrong. And so that is where the trading opportunity is. And that is why, we'll be watching quite closely because Red Book retail sales was kind of weaker. But there's definitely room for a surprise on both ends of those releases. And then we have New Zealand business PMI, which will be important, consumer inflation expectations from Australia. And then on Friday, we have some minor data from the rest of the world. US has Empire State. Talked about how Empire State is the first manufacturing report that we get from the US and is a nice leading indicator for Philly Fed, for ISM manufacturing, and then ISM services. So I like to watch that quite closely. We also have industrial production numbers from the US and the University of Michigan Consumer Sentiment Index. Now, I think that's going to be weaker because job growth was weaker, and also stocks are starting to turn lower. So I think the UMich survey could be weaker as well. On a technical basis, euro dollar, like I said, I'm bearish euros. Euro hit a year-to-date high on Friday, seems to be pulling back a little bit. Euro yen is really one of my favorite trades. I've been all over this. But I don't think we're going to see a huge move in euro dollar today. I think it's all going to be based upon CPI and retail sales. The levels to watch is obviously going to be 109.80 to the top side, recent swing high, and to the downside it's going to be 108.80. That's going to move, open up the door for a downside move. Dollar yen. It's 5 straight days of losses. Support at 1.046 is a pretty significant level of support. We have this swing low here. We have the 200 SMA there. So once again, it's all going to be determined by CPI retail sales. Technically, it looks like it could bounce there. If it rallies, I would sell on a rally, but we're going to have to be dynamic about this and recognize that the reason why it's not pushing lower is because of the data. Although I think any rally on dollar yen should be sold. Pound dollar also retracing a bit, but this is an inside candle, so it doesn't tell us too much. But if it drops to 127.50, that's a support level, and 129 is resistance. Dollar Swiss, we are rallying today. I think dollar Swiss is also a sell, particularly if it gets to 88, 89 region, but expect consolidation before tomorrow's release. That's why I'm not going to trade ahead of US CPI. It's such an important piece of data. It can completely switch the technicals. Aussie dollar looks like on a technical basis that's flaming out, that it could potentially drop to 65.60. Technically, it looks all of this telling us that we could see a dollar bounce. But once again, all hinges on U.S. inflation data and U.S. retail sales. Not much going on in Kiwi. 61.40 resistance, 62.20 resistance, 61.40 support. And then dollar CAD, I think dollar CAD's a sell on rallies, particularly up to 135.50. But once again, we'll regroup. We do these daily live streams with our members every day. We'll group after U.S. inflation and see how all of this fares. All right, now I'd like to open up the floor to any questions before I shift it over to Boris, who will talk about gold and the equity markets. And for our BK members, type it in to ask Kathy. The rest of you can type it into our YouTube chat. And I'll let Boris talk. I'll stay on to see if there's any questions. So feel free to type away. All right, you're on camera, Boris.
Yep. Hi, guys. Okay, let me grab the screen here, and let's talk a little bit about gold. Make sure there's my stream. So, gold is sort of at an interesting point right now. It's still showing itself to be bullish on the 1-hour chart. We're looking at the 1-minute chart here. There's been a couple of failed bullish runs this morning. It's trying to really hard, having a hard time clearing this whole 270, 280 area, trying on its way towards the 2200. Right? 2200 would be a really, really big number because it's the first time that would ever hit that number. It's a round number. And it's kind of just sort of failing right in front of it, which is very typical of gold. So we have to watch this pretty carefully. I think, again, really if going to be treading water ahead of CPI because that's really what everybody's pivoting on. If the CPI data comes in, cool. There's very little doubt in my mind that we go through 2200, maybe even 2250 as we verticalize. If it comes in hot, yeah, I think we back off. And there could be a whole rethink on gold because the whole idea is if CPI is hot, the Fed may simply just not cut rates in June, which has been pretty much factored in. So I think up until then, we're treading water. You can see it's a very tight range. It's really going to be Tuesday's driven market on that factor, and we're going to leave it at that because until we really know what the data is, I don't think you're going to get much range or movement. Now, equities, on the other hand, are all kind of just flailing a little bit. We've been just turned bearish on the US 30 on the Dow. So we don't, we don't participate on any trades to the short side because we're primarily always scalping to the long side. But the fact that we just turned bearish generally is a sign of warning. Nasdaq has been bearish already for a whole day. So it really Nasdaq did a whole reversal on Friday. And I think it was primarily driven by this huge reversal in NVIDIA. NVIDIA went from like 960 to 860, and I think it continues to be weak. So Nasdaq could be vulnerable if the techs just kind of get hit. It's really going to be a very interesting day tomorrow. Tomorrow could be one of those determinative days that could set the tone for the rest of the week, perhaps even the rest of the month, because it's really go, no go time. If the data is hot, I think the market is going to have a serious rethink about whether there'll be a cutting of rates. Remember, everything has been priced in on the assumption that the Fed is definitely going to cut rates in June. So if we have a no-go signal tomorrow, you could have a much more steeper sell-off, not just in equities, but gold and all the risk-on plays. And that's going to be very much worth watching as a pivot point tomorrow. Tomorrow is just, I think, probably going to be the most important event of the month so far as we go. And then aside from that, there's nothing much else that's going to be a primary driver on the asset base. Oil continues to sort of tread water. Oil is actually sitting outside of this whole risk-on, risk-off trade because it's just kind of trading on its own dynamics. It's still bearish. If we look at the 1-hour chart, what we see is that we're just basically hitting a cap at the 80 level. It's sort of a 77-80 trade for quite a long time, really this whole month of February and March. And that's suggestive that we're basically in equilibrium, and that is where we are. We are pretty much in equilibrium as far as oil goes. And that's pretty much where things stand. So, a tilt to the downside if the rates really don't cooperate in both equities and gold. And if we do come in relatively cool, I think then, yes, you're going to get further extension. I think the most interesting trade there is going to be absolutely gold. And as Kathy was saying, yen. I mean, gold and yen are kind of going hand in hand right now as the two strongest trades if you can just get true directionality from the interest rates, because it's very much been an interest rate trade over there on both sides. So that's kind of how the macro markets shape up. We have a whole suite. I published a triple indicator suite of day trading strategies for our bounce strategy, which I'm going to be showing in my live trading today. So if you guys want to join me, please come join me at live trading. This is going to be really amazing. It's a scalper. It's a start of the day indicator and an end of the day indicator. Basically, a full suite to take you through the whole day and turn you profitable. I'm already up about $200 so far. Let me show you.
Well, Boris, you have a class coming up on Tuesday, right? Do you want to talk about that?
Yes, thank you for reminding me. Kathy always reminds me of the important stuff.
Probably so yes, a little bit more important than what you're talking about right now.
Right. Well, it's all part of actually this class that I'm putting together. We've had a huge amount of demand from people to help sort of educate how it is that we pass these prop tests. I've had many of my members pass my prop tests, get funded. As a matter of fact, in the last month alone, we have over $1 million worth of funding that my members have secured. And the reason is because we trade these very effective, high probability, hugely organized, sort of, easy to understand, easy to replicate, easy to make money with strategies that are perfect for passing the prop test. But we've never had a chance to kind of put them all together into a unified course. And that's what I decided to do. So for those of you who are interested, absolutely, come join me. I think if Kathy has the link, maybe she can.
Yeah, I'm going to. Yeah, I mean, over $1 million of funding. And how many traders alone this past month have you helped pass the prop test?
I think like 5 or 6 already. I'm not sure. We have a couple more in queue. Of course, I passed it myself. And one of the good things, the whole point of why I decided to do this course is because I'm going to show you lots of different ways of how you can pass the test and get funded, whether you want to do it quickly, whether you want to do it slowly, whether you want to do it with sort of large risk or small risk. The beautiful thing about all of our techniques is they can be used in a way that's very comfortable for you. Whether you want to trade trend or whether you want to trade counter trend, they're very flexible. I finally, over the weekend, consolidated everything into a 3 indicator suite. That means it's really going to be super organized, super easy to use, point and click.
Well, what are they getting out of this? Can you walk them from a high level, like the coaching lens?
They're going to get, anybody who comes join me, of course, is going to get 3 months of live trading with me, because that's going to be the best and easiest way for you to kind of understand, because we trade this live in our chat room every day, 9:30, 10 o'clock, so you can actually see these strategies put into action. But more importantly, this is the key thing that everybody really wanted. They're going to be able to come into a coaching session with me once a week, where I'm going to explain to you exactly how to use these strategies, what the logic behind these strategies is, how to set them up, and how to trade them yourself, and then help you review your own trading to help you improve it and optimize it. So it's really a combination of doing it and coaching it, and then having the tools to be able to succeed. It really gives you literally an A to Z package of everything that you need in order to be able to succeed, pass the prop test, get funded, and then hopefully trade live with other people's money, which is really amazing, because that creates incredible opportunity for you without really giving you any kind of risk in the marketplace. That's the really great thing about prop trading, is that you're able to use other people's money and get paid for any profits that you make. So really great proposition. Everybody in BK chat room is very excited about this. Everybody is. We've had multiple people already who've gotten paid out. If you're interested in doing something like this has become the hottest trend in the retail trading space. But nobody has really done a complete, I'm going to hold your hand and show you how to do it course. And so I decided I'm going to try and do that with you guys. And I think you guys will really enjoy it. It's going to be a great opportunity. It starts this Tuesday. So if you want to come join me, please come join me. Everything is recorded, by the way. Everything is on demand. So in case you miss any of the coaching sessions, in case you miss any of the live trading sessions, you can always watch them on demand. But having the tools, having my coaching, having my strategies, I think it will be really great and put you on the right spot towards success in the prop space and towards getting funded. So that's what's going on in our neck of the woods. Any questions either on YouTube or anywhere else? Let me see.
Well, there's some questions about what, under normal circumstances, from Mahendra, if there are no eco reports or major events that can affect Euro or CAD or Aussie, what do you trade? One second. So with that, what you want to do is basically risk appetite is really going to be the most important. Risk appetite is what's going to be driving the trade. So what I would do is I would basically follow what stocks are doing. And, that's going to, the market's risk appetite is going to determine how everything else trades. Boris, do you want to show the pass the prop screen so that
Sure.
Get the information?
Yes.
And then also, what's the CME Fed Funds Watch telling us about interest rates in June? We looked at that at the very beginning. Basically, it's a 70% chance of a interest rate cut in June and a 90% chance of a interest rate cut in July. So, that's basically what we're looking at. Any other questions? So as Boris said, his Path to Prop Academy begins tomorrow. So if you want to learn this, definitely click on that link I put onto the YouTube stream. Also, like you said, our traders have secured over $1 million in funding trade through his mentorship program, and that's why he's going to be kicking off. So it's something you're interested in. I think it's a fantastic program, and one that you will find very valuable, especially if you've seen everything that we do. We try to give you real value and not, try to, basically show off our Lamborghinis. So I think
we trade real market prices, real market instruments in real time. We don't tell you how we did yesterday. We're trying to tell you how we're doing today. And you see that's a proof in the pudding. These are all testimonials from all the people who've passed the tests multiple times. Some of these people have 6, 7 accounts to the tune of $500,000 each. You can see this guy, for example, this gentleman over here. How many accounts did he get funded? 1, 2, 3. That's $300,000 accounts. That's almost $1 million worth of accounts that he just got himself funded with. So it's amazing. It's a lot of fun. I mean, there's nowhere else in the world where you can spend 50, 60 bucks, get funded with $50,000, or spend a couple of $100 and maybe get funded with $500,000. There's just absolutely no opportunity in the world like this, and I want to make it real for you. So come join me. Everything starts tomorrow. Very, very excited to get it going. And we've got everything fine-tuned right now to just perfect pitch level. So I'm really, really happy to get you on board. So hopefully we'll see you guys over there.
Some questions on pound. Actually, 2 questions on pound. In terms of pound, I'm bearish pounds because I'm bearish UK jobs report. But you obviously have to recognize the fact that all of it is based upon what's going to happen with the U.S. inflation report. So make sure you watch that, because that's going to it's going to overshadow the UK jobs report. And like I said, BK traders, we talk every day about what's to come, and we'll have a lot more insight tomorrow.
Yeah, and what's really cool about us is that, as you can see, because we trade for real, and because we both come from institutional background originally, we understand that in trading, it's never only about the chart. It's always about the event and the chart together. And it's the combination of these two things that really makes quality trades. So that's why we're so focused tomorrow on the CPI, because we know that until and unless that happens, you're not going to get much movement. But when that does happen, and the ability to interpret that, the ability to trade that, is going to be tremendous tomorrow. It's going to produce some very, very good volatility and probably some funded accounts for those people that really know how to put themselves on the right side of the market. So I hope to get you started on all of this. Come join us, Pass the Prop Academy. It's our first course, and hopefully you'll be part of the rookie class. I'll see you guys over there in the markets.
All right. Thank you so much, everyone. Am I bullish or bearish euros after the ECB rate decision? You guys are asking the same questions, and we're saying the same things to you, which is, in general, I am bearish euro, I'm bearish pound, but it all hinges on inflation and retail sales, because that's going to drive what the Fed does next week. So, anyone who tells you otherwise in terms of longer term views is not a real trader, because you have to see what the inflation and retail sales trends are before really, getting the clear direction. So as much as you want to take a trade today, the best trade to make is to be on the sidelines until after the inflation report. And the inflation report is so much more important than retail sales in some ways that you don't have to wait that long. Just wait till tomorrow after the 8:30 number, and there'll be plenty of trading opportunities. So don't force it right now. A lot of you are asking questions. I think I'm sensing they're trying to force a trade. What I'm telling you, that there's such an important release coming up that could change things and give us much clearer trading opportunities. There's no trial for there's $75 weekly trial for Zip, which you can find on our website. Otherwise, it's part of our monthly membership. Or part of Boris's Pass the Prop trading program, which begins tomorrow. 3 months of coaching, access to our indicators, 3 months of live trading, special sessions to walk you on a step-by-step basis how to use our indicators and how to really pass the prop alongside him, which I think is really, really cool. So definitely check that out. I will drop the link one more time into the YouTube chat. So, check it out. And I don't know if it says YouTube redirect. Definitely check it out and, take a look at the information there.
Yeah, by the way, for those of you who are interested, the cool thing about Pass the Prop is that you kind of get Kathy for free because you're going to get 3 months of BK chat and signals. So that means you're going to be able to get access to all her zip signals as well as everything that I do, and that will be included in the deal. So that's why if you're looking for a great deal, this is a $2,500 deal that's literally discounted 85% off. It's going to go away tomorrow. Lock it in if you can. Yeah.
All right, everyone, thank you so much for joining us for Kathy's Caffeinated Market Buzz, and Boris is our special guest. We will see you next time.
Exactly, and I'll see everybody in 10 minutes in live trading. Take care, guys. Bye-bye.